Hello everyone, my name is Laura, and on behalf of the Colorado Department of Revenue, welcome to our wage withholding webinar. I look forward to providing you with an introduction to and overview of Colorado wage withholding. Our motto is to always help. Our mission is to promote voluntary compliance with tax laws through education, assistance, and customer service. This training will cover resources and tools that will help you be voluntarily tax compliant, withholding requirements and how to apply for a withholding account, the 2 acceptable types of withholding certificates, how to calculate wage withholding taxes, how to file and pay weekly, monthly, or quarterly withholding taxes, and how to submit copies of W-2s to the department and reconcile for the calendar year. Let's start with some resources and tools available to you. To help you be voluntarily tax compliant, we have our websites, the Taxpayer Helpline, where you can now schedule a time for a tax examiner to call you directly, and our local service centers located in Colorado Springs, Lakewood, Fort Collins, Grand Junction, and Pueblo. All of our local offices are open to the public for walk-ins or by appointment, and each of our locations has drop boxes if you need to drop off a form. You may also reference the department's FYIs and publications, or even send an email to our taxpayer services team. Here's your first helpful tip brought to you by the Department of Revenue interactive chatbot and Everwise tax owl named Dory. You'll be able to find many of the answers to your questions in the Colorado Wage Withholding Tax Guide. This guide is designed to provide employers with general guidance regarding wage withholding licensing, collection, filing, remittance, and record-keeping requirements prescribed by law. During this training, we'll reference that guide. Just so you're aware, Dory will also be joining us throughout today's video to provide us with helpful tips along the way. Let's begin by highlighting the department's primary websites. To access our main website for the Colorado Department of Revenue Taxation Division, please go to tax.colorado.gov. To access our customer portal, please go to colorado.gov/revenue online. From the main website, tax.colorado.gov, you can find information for businesses, individuals, tax professionals, forms by tax type or number, and the latest news. The most current version of all forms referenced in this video, as well as all other forms, can be found on our website from the homepage under the Forms tab. Think of our website as a Colorado tax information superstore that's always open and all the information is free. Here's another helpful tip from Dory. You can easily access the Colorado State Tax and Fee Due Date Guide directly from our homepage. This guide is an excellent resource for information regarding filing, payment deadlines, methods, and associated forms for both business and individual taxes. Scroll to the bottom of the page and under Helpful Links, select Due Date Guide. Revenue Online is an administration portal that you can use to apply for a license, file returns, make payments, submit year-end withholding and copies of W-2s, and sign up to receive email alerts about important tax information, including changes to tax laws. Revenue Online also has a variety of helpful links that you can use to perform actions such as submitting a power of attorney or e-filer attachment, verifying a license or certificate, sending us a secure message, responding to or protesting a letter, requesting a letter ID to create a Revenue Online account, updating your mailing address, or even closing your account. We also know that understanding tax policy isn't always easy. So, to help answer common taxpayer questions, the department launched Dory, an automated self-service chatbot on Revenue Online. Dory is the bright orange tax owl that roosts at the top of the Revenue Online homepage. Dory is a helpful resource whose vocabulary and answers are constantly being refined based on taxpayer feedback. We encourage you to use Dory the next time you visit Revenue Online, and when you do, Please provide feedback so that we can continue to tailor and improve Dory's information and answers. Now that you've learned about the resources and tools available to you, let's talk about Colorado's wage withholding requirements. In general, an employer required to withhold federal income tax must also withhold Colorado income tax on Colorado wages. In other words, if Colorado wages are subject to federal wage withholding requirements, they are also subject to Colorado wage withholding requirements. Wages exempt from federal wage withholding are usually exempt from Colorado wage withholding as well. Yet, there are many nuances, such as the employee's state of residency. So in situations where wages may be exempt from federal withholding, we encourage you to consult with a tax professional. Second, employers paying Colorado W-2 wages must withhold Colorado income tax from such wages. More in-depth information on this can be found in Rule 39-22-604 of the CCR 201-2 Colorado Income Tax Withholding Publication. If an employee performs work in Colorado, the wages are subject to Colorado income tax withholding, even if the employee is a part-year or non-resident. For example, if a permanent resident of California performs work in Colorado, the wages for the work performed in Colorado are subject to Colorado income tax withholding requirements. As another example, if the employee were a part-year resident of Colorado and a part-year resident of California, all wages for work performed in Colorado would be subject to Colorado income tax withholding. The wages of Colorado residents are subject to Colorado income tax requirements regardless of whether a Colorado resident is working inside or outside of Colorado. For example, Wyoming does not require withholding tax on the wages of employees performing work in their state. So, if a Colorado resident performed work in Wyoming, then the employer must withhold Colorado income tax from the employee's wages. There is one exception to this rule. If a Colorado resident performs work in another state and that state does impose income tax withholding requirements on the employee's wages, then Colorado income tax withholding is not required on those wages. This is so that the wages are not subject to Colorado income tax withholding requirements. For example, California requires income tax withholding on employee wages for work performed in their state. So, if a Colorado resident performed work in California, their employer must withhold California income tax on those wages, as the wages would not be subject to Colorado income tax withholding requirements in this situation. If there are other factors not mentioned in these general requirements, please consult with a professional. There are 4 important withholding account requirements for employers with employees who earn wages subject to Colorado income tax. First, employers must register with the Colorado Department of Revenue for a wage withholding license. Second, wage withholding returns and payments must be made on a quarterly, monthly, or weekly filing frequency. The Colorado Department of Revenue determines filing frequencies. Third, a W-2 must be prepared for each employee. The federal Form W-2 must show the Colorado income taxes withheld from each employee's pay for each calendar year. Fourth, copies of W-2s must be provided to each employee and the Colorado Department of Revenue. This needs to be completed by the employer no later than January 31st of the year following the close of the prior calendar year. For example, W-2s for the calendar year starting January 1st of 2024 and ending December 31st of 2024 are due no later than January 31st of 2025. Employers required to withhold Colorado income tax from employees' wages are liable. This means that if an employer fails to withhold Colorado income taxes when required, the employer is still liable to pay the taxes to the Colorado Department of Revenue. Now that we know about wage withholding requirements, let's go over the 2 ways an employer can apply for a withholding license. If an employer has a physical location in Colorado, the employer can choose to apply online or by paper. Examples of physical locations include an office, distribution facility, sales room, or warehouse. If an employer does not have a physical business location in Colorado, the employer must apply using the paper form CR0100. When applying using form CR0100, it is important to fill out all parts of the application that are required and that apply to your situation. The most common and frequent reasons a CR0100 is delayed or denied is due to incorrect or missing information. Please note that sections C and E are only required if you intend to also apply for a sales tax account. If you need additional assistance completing the application, the form and instructional video are available on our website. Go to tax.colorado.gov, select Forms, then Forms in number order, then find form CR0100, and you'll also see a link for the CR0100 instructional video. Employers that have a physical place of business in Colorado also have the option of applying online through MyBiz Colorado at mybiz.colorado.gov. Employers eligible to apply online using the MyBiz Colorado platform can also apply for an unemployment insurance account with the Colorado Department of Labor. MyBiz also provides links to other Colorado state agencies. For instance, MyBiz will have a link to the Colorado Secretary of State's website. The Secretary of State is the agency you will use to register a business in Colorado. Employers not eligible to use MyBiz will need to contact each state agency for agency-specific instructions. There are no license fees for a wage withholding account, but the department does assess application fees for other tax types. Processing times may vary based on how you apply. If you mail in the CR0100 application, it will take 4 to 6 weeks to receive your official license in the mail. If you are only applying for a wage withholding account, you can email a completed application. If emailed, expect to receive your official license in the mail in 2 to 3 weeks. If you are also applying for a sales tax license, do not email the application. A sales tax license application received without a sales tax license fee payment will be delayed or even denied. If you choose to visit a service center to submit the CR0100 application, the license will be printed on-site and received immediately. For employers eligible to apply online through MyBiz, the account number is issued immediately. It will still take 2 to 3 weeks for the official license to be received by mail. Here's another helpful tip from Dory. When you receive your withholding license in the mail, please do not throw the detachable part of the license away. Letters sent by the Colorado Department of Revenue each have a unique letter ID number. A letter ID number is valid for 30 days and will allow you to sign up for a Revenue Online account. A Revenue Online account is needed to manage withholding and other Colorado Department of Revenue tax accounts. There are 2 withholding certificate forms used to calculate Colorado wage withholding taxes. The Federal W-4 Withholding Certificate is the default used to calculate Colorado withholding. An employee may instead choose to use the Colorado DR 0004 Withholding Certificate. This certificate is optional. It is often used when an employee wishes to adjust the default W-4 withholding calculation. There are 2 main points to remember when it comes to withholding certificates. First, employers must give employees the federal W-4 certificate form. Employers must collect the completed withholding certificates from every employee. Sometimes an employee fails to provide the employer with a completed withholding certificate. If this occurs, the employer must calculate withholding for the employee. In this situation, withholding is calculated as if the employee had filed a federal Form W-4 indicating that they were a single filer. Second, the Colorado DR 0004 Employee Withholding Certificate is optional. It is intended to help employees fine-tune their Colorado state withholding and is the only way to adjust the default W-4 withholding calculation. If an employee asks about adjusting their withholding, the employer is required to provide the DR 0004 form to the employee. New withholding certificates override all previous certificates and withholding calculations. An employee may want to adjust their Colorado income tax withholding for one or more of these reasons. An employee expects to claim additional federal deductions or Colorado tax credits, including any child tax credit, the family affordability portion of the child tax credit, the Earned Income Tax Credit, or EITC, or the new Care Worker Credit. An employee and their spouse, if filing jointly, earn most of their income from one job. An employee expects significant income from other sources. For help with Form DR 0004, links to resources and training tools are available in your Important Links document. Please note that for most taxpayers, completing this certificate will likely increase your take-home pay, reduce your Colorado withholding, and reduce your refund when you file your Colorado income tax return. Consider the amounts you enter carefully. If too little is withheld, then you will owe tax when you file your return, and you may owe a penalty. In general, employers must keep and maintain the withholding certificates in the employer's records. Copies of the federal W-4s are not typically required by the Colorado Department of Revenue, except when an employee submits an exempt withholding claim on the federal W-4 form, has not submitted Form DR 0004 requesting Colorado withholding, and earns more than $200 per week. If this is the case, then employers are directed to promptly file the W-4s with the Colorado Department of Revenue. When mailing copies of exempt W-4s to the Colorado Department of Revenue Discovery Division, please include the employer's name, address, Federal Employer Identification Number, or FEIN, and the number of W-4s being submitted. For this and more information on withholding certificate filing requirements, please reference the Withholding Tax Guide and our Withholding FAQ webpage at tax.colorado.gov/withholding-FAQ. Colorado has a flat income tax rate. This means that the income tax percentage is the same regardless of the income level. Colorado income tax calculations are based on federal taxable income, or FTI, as calculated on the Federal Income Tax Return, Form 1040. This is generally why Colorado uses the federal Form W-4 as the default for withholding calculations. When it comes to calculating Colorado wage withholding, Dory has a very important message to share, as this is a common error. Gross wages minus any pre-tax deductions equals taxable wages. Employers must use the taxable wages, not the gross wages, to calculate withholding. To calculate withholding, all employers must complete the Colorado Withholding Worksheet for Employers, Form DR 1098, using the values from an employee's withholding certificate. If an employee gives the employer a completed DR 0004 withholding certificate, the data from the DR 0004 is used to calculate withholding on Form DR 1098. If a DR 0004 is not submitted, the employer must use the data from the federal W-4 to calculate the withholding on Form DR 1098. Please pay close attention to the withholding certificate data. If an employee completed Form DR 0004, the values entered on lines 2 and 3 of the certificate are used to calculate withholding on the DR 1098 worksheet. Line 2 is the annual withholding allowance. Line 3 is additional withholding amounts being requested. If an employee submits Form DR 0004 with an amount listed on line 3 and line 2 is left blank, the employer should verify that the employee intended to leave line 2 blank and not enter 0. If line 2 of the DR 0004 was intended to be left blank, or the employee did not complete Form DR 0004, please use the data from the Federal W-4 Withholding Certificate. The filing status from Step 1, Section C of the W-4 determines the annual withholding allowance that is used to calculate Colorado withholding on the DR 1098. The annual withholding allowance is based on federal income tax standard deductions. Federal W-4 default calculations should result in an income tax refund for most employees. Additionally, wage withholding must be calculated separately for each pay period, as employee wages may change from one period to the next. The values from the DR 1098 pay period table do not change. This is because the values from the pay period table are used to determine a ratio of income and withholding. So, if the value is altered, it will result in underwithholding for that period. For example, businesses with weekly pay periods will always use the value of 52 per the pay period table. Federal taxable income is the basis for Colorado taxable income. Dependents do not impact or affect federal taxable income calculations. This means that dependents claimed on the W-4 do not impact or affect Colorado withholding calculations. Even so, an employee with dependents may adjust their annual withholding allowance using Form DR 0004. For example, an employee may reduce their withholding to account for a likely Colorado tax credit, including any child tax credit, the family affordability portion of the child tax credit, the Earned Income Tax Credit, EITC, or the New Care Worker Credit. Employees should always first check the tax credit requirements and verify that they qualify for the credit before adjusting their withholding. Now that we've covered how to calculate wage withholding taxes, let's talk about filing frequencies and due dates. There are 3 wage withholding filing frequencies set by the Colorado Department of Revenue. Based on an employer's annual withholding tax liability, an employer's filing frequency will be weekly, monthly, or quarterly. Employers with a withholding tax liability of $50,000 or more per calendar year are on a weekly filing frequency. At least $7,000, but not more than $50,000, are on a monthly frequency. And $6,999 or less are on a quarterly frequency. Dory has an important tip for us, as this is a common error we see with withholding license applications. Filing frequency thresholds are based on the employer's annual withholding tax liability, not on annual employee wages. The department can and will automatically increase an employer's filing frequency in certain situations. For example, let's say an employer's annual withholding tax liability was less than $6,999 when they first started. This means the employer was on a quarterly filing frequency. The next calendar year, the employer's withholding tax liability increased to $17,000. Thus, the employer exceeded the quarterly filing frequency threshold of $6,999 or less. Because of this, the department will automatically increase the employer's filing frequency to monthly. Changes made by the department to wage withholding filing frequencies take effect on January 1st of the next calendar year. Employers are sent a letter when there is a change to the filing frequency made by the department. Letters are generally mailed 1 to 2 months before the change takes effect, so please ensure the employer's mailing address is correct. To avoid late penalties or interest, it is the employer's responsibility to communicate any filing frequency changes to any of its third-party preparers. An employer may elect at any time to file on a more frequent filing frequency, but generally cannot elect to reduce their filing frequency. For example, an employer can increase their filing frequency from quarterly to monthly. An employer must request permission from the department to decrease a filing frequency. When doing so, the employer must continue to file and pay withholding under their current filing frequency until the department has made a ruling. Dory is here to share some helpful information when it comes to withholding filing frequencies. Withholding filing frequencies are determined by the Colorado Department of Revenue, not by an employer's payroll cycle. The distinction between the filing period, start, end, and due dates does matter. Knowing these important dates and how to use them may prevent errors in processing returns or payments. Finally, if a due date falls upon a Saturday, Sunday, or legal holiday, the return and payment are due the next business day. Weekly filing periods start each Saturday and end the following Friday. Returns and payments are due within 3 business days from the end of the filing period, which means the due date typically falls on a Wednesday. In this example, the employer has a withholding tax liability exceeding $50,000 per calendar year, which means they are on a weekly filing frequency. So, any payroll processed by the employer starting Saturday, December 21st and ending Friday, December 27th would have been due on Wednesday, January 1st. But because January 1st was an observed holiday, the withholding was due the next business day on Thursday, January 2nd. Weekly filers are required to pay using an electronic funds transfer, or EFT, payment method, which we'll cover soon. In addition to the standard weekly filing periods, weekly filers have a final weekly filing period at the end of each calendar year, on December 31st. Regardless of whether the 31st falls on a Friday, the final payment is due the 3rd business day after the 31st. This means that payroll processed during the final weekly filing period started per usual on a Saturday, December 28th, but ended early on Tuesday, December 31st, the last day of the calendar year. In this case, since the 1st was an observed holiday, the withholding was due Monday, January 6th, 3 business days after the final weekly period ended on December 31st. Because of this year-end adjustment to the final weekly filing period, an adjustment will also typically occur the following week. In this example, the filing period the following week started late on Wednesday, January 1st of the new calendar year, ended per usual on Friday, January 3rd, and was due as usual on Wednesday, January 8th. In our second example, the employer's total annual withholding tax liability is greater than $7,000 but less than $50,000, so the filing frequency is monthly. Monthly filing periods start on the first day of the month and end on the last day of the month. Returns and payments are due on the 15th day of the month following the end of the previous month. For this example, any payroll processed by the employer between the start date of January 1st and end date of January 31st is due February 15th. In our last example, the employer's total annual withholding tax liability is less than $6,999, which means the employer is on a quarterly filing frequency. Quarterly filing periods start on the first day of each calendar quarter and end on the last day of each calendar quarter. Returns and payments are due on the last day of the month following the end of each quarter. In this example, the employer remitted withholding taxes due for all payroll processed during the first quarter, which started on January 1st, ended March 31st, and is due on April 30th. Monthly and quarterly filers must file a tax return even if no tax is due. Otherwise, the department may estimate the amount of tax due. If this were to happen, the department would send the employer a notice of deficiency. An employer can report and file zero tax using one of the following four methods: filing a paper DR 1094 return, filing a return through Revenue Online, submitting a zero ACH debit return payment through Revenue Online, or by submitting a zero ACH credit return payment through the employer's bank. Now let's review the Colorado W-2 Wage Withholding Tax Return, Form DR 1094, and filing requirements. Withholding must be calculated for each business entity. Each business entity must operate under a single Colorado account number, or CAN. A Colorado withholding return and payment posted to the entity's CAN must include all calculated Colorado wage withholding for the business entity, wages for all employees at all locations working for the business entity, and all wages paid for all the business's pay periods within the Colorado withholding filing frequency. Separate returns are not filed per employee. Each return and payment must include all Colorado wage withholding for wages paid during the filing period, even if the employee's work to earn the wages was not performed during the filing period. How you pay wage withholding determines how to file the DR 1094 Colorado W-2 Wage Withholding Tax Return. The first two payment methods require an employer to both make a payment and file the DR 1094 tax return. If you pay withholding with a check or money order, you must also file the withholding tax return with your payment. If you pay withholding with a credit card, debit card, e-check, or cryptocurrency, you must also file online. The electronic DR 1094 tax return can be filed through your Revenue Online login. You do not need to file a separate DR 1094 withholding tax return if you make a payment using either of these methods: an ACH debit return payment through Revenue Online or an ACH credit return payment through your bank. This is because using either of these payment methods satisfies the filing requirement. Employers not required to remit return payments using an EFT method have the option of paying by check or money order instead. The payment must be mailed with a completed DR 1094 W-2 wage withholding tax return. Failure to complete all required fields of the return may result in processing errors. Please be sure to verify that the return is complete and accurate. The return and payment must be postmarked on or before the due date to be considered on time. If the postmark date is past the due date, you may incur late penalties and interest. The electronic and paper versions of Form DR 1094 are identical in their line numbers and used for reporting. Third-party transaction fees apply to credit card, e-check, and cryptocurrency payments. If you choose any of these payment options using Revenue Online, we highly recommend also filing the return online to prevent processing errors. Remember that how you pay determines how you file. You do not need to file the DR 1094 tax return if you pay withholding with an ACH debit or ACH credit, also known as an electronic funds transfer or EFT. This is because an EFT return payment satisfies the filing requirement. In other words, when you make an EFT return payment, you are reporting the withholding liability and making the tax payment all in one step. An ACH debit payment can be made through Revenue Online. An ACH credit payment can be made through your bank. If you choose to pay by EFT, be careful not to file a separate return, as this will duplicate the liability for the filing period. This is a very common error we see, and that is why it is important to remember that when it comes to withholding tax, how you pay determines how you file. It looks like Dory has some important information on EFTs to share with us. All employers with annual wage withholding liabilities greater than $50,000 are required to pay by EFT. One of the major benefits of paying by EFT is there are no transaction fees. This is why businesses that are not required to pay by EFT often still choose to use it. It is a one-step method to file and pay withholding, and there are no transaction fees. There have been some important changes for EFT payments. To make EFT payments, taxpayers used to have to apply for an EFT number by completing Form DR 5785. Though taxpayers that had an EFT number can continue to use it to make EFT payments, the EFT number and form are no longer required. Taxpayers can now make EFT payments using a Social Security number, Federal Employer Identification Number, FEIN, or Colorado Account Number, CAN. The Social Security number, FEIN, or CAN must be associated with your business or individual account. For ACH credit payments, enter the Social Security number, FEIN, or CAN in place of where the EFT number had been used before within the ACH credit file. The bank account information to send an ACH credit EFT payment to the Colorado Department of Revenue is available on our website. Go to colorado.gov/revenue online. Under Payment Options, select Make a Payment, then select ACH Credit Information Only. Though the DR 5785 form is no longer required, it still contains very useful information. For example, taxpayers use EFT payment codes from the DR 5785 to apply EFT payments to the correct tax type and situation. This is why it is highly recommended to print the DR 5785. Important payment codes related to W-2 withholding include 011 to make a return withholding liability payment. This code also serves as the DR 1094 withholding tax return filing. Payment code 01130 is used to make a bill payment towards penalty and interest on a late filed return or payment. Code 01102 is used to make a calendar year-end reconciliation payment. A reconciliation payment is only used if withholding for the entire calendar year was underpaid. For more information about ACH debit and ACH credit payment options and requirements, please refer to Form DR 5785. You can also refer to Form DR 5782 for more information on all payment types and requirements. If there is an error when filing the DR 1094, it can be corrected in the next filing period so long as it's corrected within the current calendar year. Because of this, there is no amended version of the DR 1094. How to correct the error depends on whether the withholding tax was understated and underpaid or overstated and overpaid. Return payments applied to the same filing period are summed together. So, if withholding taxes were underpaid, a supplemental return payment for the difference can be made to that same filing period. For instance, let's say an employer made a return payment of $1,200 in the first quarter, but later realized it should have been $1,500. In this case, the employer can make a supplemental return payment of $300 to the same first quarter filing period. The sum of the original $1,200 payment plus the supplemental $300 payment equals the correct $1,500 total withholding for the first quarter. Supplemental return payments must be made on or before the due date to avoid late penalties and interest. Also, like payments, withholding amounts reported on each DR 1094 tax return filed to the same filing period are cumulative. So, when sending a supplemental payment that requires a DR 1094 tax return, the return must have the same amount as the payment. In this example, the original tax return reported $1,200 in withholding tax, with a payment of $1,200. So, the supplemental return would report the additional $300 in withholding tax with a payment of $300. If withholding was overpaid, it can be accounted for in later filing periods, so long as 1. The overpayment and correction occur in the same current calendar year, and 2. No credit exists on the withholding account. Continuing our previous example, the employer paid $1,200 for the first quarter. The employer later determined income taxes withheld were $1,500, but instead of paying the extra $300 for the underpayment, the employer made another payment of $1,500. So, the total withholding reported and paid in the first quarter was $2,700 instead of $1,500, resulting in a $1,200 overpayment. Let's see how to account for this in later filing periods. On the DR 1094 tax return, Line 1 is the total Colorado taxes withheld for the filing period. Line 2 can be used to account for prior period overpayments in the same current calendar year. Line 2 cannot exceed Line 1. In other words, a claim for an overpayment to a previous filing period cannot exceed Colorado taxes withheld for all subsequent filing periods. For example, let's say the employer's total withholding liability for the second quarter is $1,000. Of the total $1,200 overpayment to the first quarter, the employer can only claim $1,000 in the second quarter on Line 2 because Line 2 cannot exceed Line 1. This reduces the payment in the second quarter to $0. In the third quarter, the total withholding liability is $1,300. So, the employer can claim the remaining $200 overpayment made to the first quarter, reducing the payment in the third quarter to $1,100. In our example, W-2 Colorado income taxes withheld were $1,500 the first quarter, $1,000 the second quarter, $1,300 the third quarter, and $1,600 the fourth quarter, for a total of $5,400. Ideally, the payments would have matched the actual taxes withheld each quarter. But because of the first quarter overpayment, the employer had to make some adjustments. Even so, the payments of $2,700 to the first quarter, $1,100 to the third quarter, and $1,600 to the fourth quarter still totals $5,400. We recognize that not all reporting or payment discrepancies can be reconciled in the current calendar year. This is why the department created Form DR 1093. The DR 1093 Annual Transmittal of State W-2 Forms is used for two purposes. 1. To reconcile over or underpayments that could not be reconciled during the calendar year, or 2. To submit copies of W-2s. We've covered withholding remittance requirements for weekly, monthly, and quarterly filers. Employers are also required to reconcile withholding for each calendar year. This means verifying the total withholding payments for the year equals the total of all W-2s. Calendar year over or underpayments are reported on the DR 1093 Annual Reconciliation Return. The DR 1093 is due on or before January 31st of the following year. This is extended to the next business day if the 31st falls on a Saturday, Sunday, or holiday. Every employer subject to Colorado wage withholding requirements is also required to produce an annual W-2. The employer must provide the federal W-2 wage and tax statement to the department and each employee for every calendar year. The W-2 must report the employee's Colorado wages and Colorado withholding. Form DR 1093 is used to reconcile withholding discrepancies over a calendar year due to an underpayment of withholding where a reconciliation payment is due, or an overpayment of withholding where a refund is being requested. If the DR 1093 return is filed by January 31st, it will serve as the claim for a refund of the overpayment. If the DR 1093 is submitted after January 31st, a refund claim, Form DR 0137, is also required. Withholding refund claims received after the deadline will have significantly longer processing times. This is why it is extremely important to remember W-2s and the DR 1093 reconciliation return are due by January 31st after the close of the calendar year. There is often confusion at the end of the calendar year. Part of this confusion is because for most filers, the DR 1094 and DR 1093 have the same filing period end date of December 31st. Most employers file the final DR 1094 return and make the final payment due on December 31st. However, this final payment is often excluded from the total calendar year payments on line 2 of the DR 1093. In this example, the employer paid withholding taxes of $3,800 for the first 3 quarters. But when the employer completed the DR 1093, they forgot to include the 4th quarter payment in the total payments on line 2. Since the $1,600 payment was excluded on line 2, it will appear as a balance due on line 3A. This then posts to the withholding account as an amount owed in error, and a delinquent notice is mailed to the employer. To correct this error, the employer must file an amended DR 1093 reconciliation return to correct the amount on line 2. This is why it is so important to verify all withholding payments for the entire calendar year are included on line 2. There are 2 ways to file the annual transmittal of state W-2 forms reconciliation return, Form DR 1093. You can file through Revenue Online or by completing and mailing a paper return. While we've covered a few methods to account for over and underpayments using the DR 1094 and DR 1093, we cannot address every possible situation. To resolve withholding account discrepancies, contact Taxpayer Services as soon as possible at 303-238-7378. There are 2 methods to submit employee W-2s to the department: electronically through Revenue Online or by mail with Form DR 1093. An employer required to file federal W-2s electronically must also electronically file Colorado W-2s. For calendar year 2023 and prior years, electronic filing is required if the employer must file 250 or more federal W-2s during the calendar year. This applies to W-2s for tax years 2022 and prior. For calendar year 2024 and later years, electronic filing is required if the employer must file 10 or more federal W-2s during the year. This lower threshold applies to tax year 2023 W-2s. Employers not required to file electronically may still choose to do so. Employers who plan to submit W-2s electronically must first request submitter access by pre-registering on Revenue Online. This must be done at least 7 business days before the first electronic W-2 submittal. Dory has an important message on electronic W-2 filings. If for the calendar year W-2s are filed electronically, and the total Colorado withholding reported and remitted to the Colorado Department of Revenue equals the total of all W-2s for the calendar year, no Form DR 1093 annual reconciliation return is required. However, if the withholding taxes paid do not equal the total of all W-2s for the calendar year, then a DR 1093 return must be filed. Employers not required to file electronically may instead submit copies of their physical W-2s by mail. Copies of all W-2s for the calendar year must be attached to a completed DR 1093 annual transmittal of state W-2 forms tax return, even if there is no refund being claimed and no balance due being reported. An employer that goes out of business, dissolves, or is merged into another corporation, no longer has employees, or otherwise ceases paying wages, must file W-2s with the department within 30 days of the final payment of wages. After the final return is filed and the W-2s are submitted, the account should be closed. An account can be closed through an established revenue online login or by submitting a DR 1108 business tax account closure form. This and other helpful forms, along with all withholding tax forms referenced in this webinar, can be found on our website at tax.colorado.gov/withholding-tax. If a federal W-2 issued by an employer contains errors, such as reporting an incorrect Social Security number, incorrect wages, or an incorrect amount of Colorado wage withholding, the employer is required to furnish both the employee and the department with a corrected W-2, also called a W-2C. W-2Cs to report the correct information must be submitted in the time provided under federal law for correcting W-2s, generally by January 31st. If the corrected W-2C results in a variance between the total of all W-2s and the amount of withholding taxes paid, please complete Form DR 1093 and include a copy of the W-2C. If the W-2C is being furnished for informational purposes only, please mail the corrected W-2 with a cover letter to the Colorado Department of Revenue, Discovery Section, P.O. Box 17087, Denver, Colorado 80217-0087. For more information on electronic W-2 formatting and filing requirements, please reference Part 4 and Appendix A of the Colorado Wage Withholding Tax Guide. Additional information on submitting electronic W-2s is available on our website, or you can contact the Discovery Division at 303-205-8292. In accordance with Section 39-22-604-6C of the Colorado Revised Statutes and per House Bill 23-1006, Employer Notice of Income Tax Credits, for the income tax years commencing on and after January 1st of 2023, employers must provide to all employees who receive a Colorado Wage and Tax Statement Form W-2 all the language contained in the template provided on Form DR 0995. The Notice of Federal and State Refundable Tax Credits must be provided in writing to each employee by January 31st of each year. This is the same deadline for providing W-2s to employees. This notice includes information about what a refundable tax credit is, earned income tax credits, child tax credits, family affordability tax credits, and how to claim these credits. There is also information for qualifying taxpayers about free income tax filing help. The DR 0995 notice must be written in English and in any other language that the employer typically uses to communicate with its employees. Employers may either copy all the language in the notice into a separate document or print or scan the second page of the DR 0995 and provide it either electronically or in print to each employee. Employers must provide all the language in the notice to the employee. Employers can not only provide the URL tax.colorado.gov/CTC-EITC for the department's information on child tax credits, earned income tax credits, and family affordability tax credits to the employee. If printed, notices must be at least 5.5 by 8.5 inches or half of a standard sheet of paper. A printed notice must be its own page. The department recommends providing the notice on page 2 of the tax documents delivered to the employee. Notices do not have to be provided in color. This webinar provided an introduction to and overview of Colorado W-2 wage withholding. For resources to other withholding tax types, such as 1099, W-2G, or severance tax withholding, please visit the department's main website. From our website, you can also access our W-2 wage withholding important links document for all resources and forms referenced during this webinar and view our most recently recorded wage withholding webinar. To do so, visit tax.colorado.gov, select the drop-down arrow next to the Businesses option in the blue bar, and select the Tax Education and Training option. Under the Quick Links section, select Webinar Registration and Resources, then select Wage Withholding Webinar. To stay up to date on all tax-related topics, we hope you'll connect with us on LinkedIn, our YouTube channel, Facebook, and Instagram. The Colorado Department of Revenue aims to make complex tax information easier to understand to enable accurate and on-time tax filings. This presentation is intended to provide general information concerning Colorado tax topics in simple and straightforward language. While we have done our best to provide accurate and complete tax information, this information is not binding on the Department of Revenue, nor does it replace, alter, or supersede Colorado tax laws and regulations. We recommend consulting with a tax professional for your specific tax situation. The Colorado Department of Revenue is always here to help you be voluntarily tax compliant through education, assistance, and customer service. On behalf of the Colorado Department of Revenue, Taxation Division, Education and Training, thank you for your kind attention. We strive to continuously maintain and update training materials promptly. For the most up-to-date information, please frequently check the department's website and YouTube channel for the most recent training materials available.